Welcome back to the Dividend Diplomats YouTube channel. You got Bert and Lanny over here ready to talk to you about our second battle royale versus Big Tobacco, the two behemoths, Philip Morris and Altria.
So everyone, smash that subscribe button, give us that thumbs up, ring that little bell so you can get a notification every time we get a new video and produce it and put it on our YouTube channel. We cannot wait to talk to you and help you figure out which is the best tobacco stock to buy today.
I know every day you probably wake up wondering, gosh, is it Altria or is it Philip Morris?
I know that thought crosses my mind at least 4 times a day, 5 times maybe.
No, obviously just kidding. I know this is a very taboo topic. Yeah. I know even those that invest in the stock of Philip Morris, which is ticker symbol PM, or Altria MO, we always get the questions of, do you feel like you're a good investor though for investing in these taboo stocks? Well, as a dividend investor, it's hard to argue the addictive nature of the business model because of that recurring revenue you're going to receive. But obviously it's not easy to not talk about or think of the facts of the health reasons behind them.
Right. We would be remiss as dividend investors if we didn't bring up these companies and talk through them and see if they fit into our portfolio. Again, if you don't want to invest in them because it's the health reasons, we're not endorsing that. We would never want you to invest in something you're not comfortable with. But if you get past that, we want to help you figure out which one's the better one to put into your dividend stock portfolio.
Now again, these two dividend beasts, really show a lot of bright signs. And, again, we're talking to you as dividend investors and stock investors because these two dividend paying companies may deserve a spot in your portfolio because, this may help you on your journey to build up that passive income or that dividend income source as you try to reach financial freedom.
Yep, both of them have earned a spot in Lanny's portfolio. I own Philip Morris already. I've never made the plunge into MO, so I'm excited to see at the end of this video, maybe it's time for me to add them to my watch list as well.
Another, small little item here, we talk about the health, but, I know that they're both directly trying to make investments to try to figure out a way to make it less of a hazard for you with, Philip Morris and their investments that, Bert will talk about, as well as Altria and their investments. And as dividend diplomats, we like to run these companies through a certain type of stock screener.
The dividend diplomat, dividend stock screener.
Yes, you know it. And those metrics from the dividend diplomat stock screener focus on 3 critical metrics that will run Philip Morris and Altria Group through.
Yeah. All right. Let me kick them off and just give you the background on them. First is the PE ratio, price to earnings ratio, is less than the S&P 500. Second metric is the dividend payout ratio is less than 60%. And the third is the history of increasing dividends and the company's dividend growth rate. We're excited to bring this analysis to you and figure out which is the best stock to buy in this industry. Going
in order on these big tobacco companies, we always like to start with that price to earnings or PE ratio. So I know, Bert will start us off here with the Philip Morris PM price to earnings.
Yep, perfect. So at the time of this video, Philip Morris is trading just under $78 per share. Their forward earnings is $5.60 per share, which gives them a price to earnings ratio of 13.8, so just under 14. That is below the current S&P 500, which usually trades at a PE ratio of 18 to 20. So that's a nice little check here for Philip Morris to start it off. Lanny, why don't you kick us off with Altria?
Wow, it's going to be a little hard to beat Philip Morris.
But can they?
But can they? That's the question. So Altria, ticker symbol MO, and their price to earnings ratio actually does beat Philip Morris.
What?
They smoked them out of the competition.
I see what you did there.
Yeah. Ting. But, Altria Group is actually trading just a hair over $42 per share. And analysts are projecting actually almost $5 per share at $4.56 for 2021. Mm-hmm. So when you do the math of the share price over that forward earnings projection, their actual PE ratio is a 9.33 currently.
Wow, that is much lower than Philip Morris. And I think we learned an important thing about the two largest companies in the tobacco industry. both are trading at a significant discount to the market, which is an excellent place to be right now.
Another thing I'd like to add about these two companies, I know Bert's probably more of a Virginia Slim guy over here. I'm more of a Marlboro guy. No, kidding. We do not smoke. We do not, endorse it or, tell you to go and smoke cigarettes. Going into the second Dividend Diplomat stock metric in our stock screener, it's going to be the dividend payout ratio, the safety of the dividend. Do they have the ironclad doors protecting that dividend, or are they kind of swimming right now with the fishes?
Yeah, as Warren Buffett always says, our buddy, you really find out who's swimming naked when the tide pulls back.
Too bad cigarettes can't stay lit in water.
Yeah.
So.
All right, so let's dive into the payout ratio.
All right, the payout ratio.
All right, so Philip Morris, their dividend of $4.68 per share, their earnings per share is $5.60, as we mentioned earlier. That gives them a dividend payout ratio of 84%, which is way above the 60% metric that we have. Again, it's still got some room underneath the 100%, so we're not quite paying out more than the earnings and what the company plans on earnings going forward. However, it is having me pause for a second and think about the payout ratio. So what I want to see is I really want to compare this to Altria. Now, let me see, is this a tobacco industry high payout ratio metric, or is this something that's just unique to Philip Morris? So Lanny, what is Altria's payout ratio?
Very good point, Bert. Altria's dividend payout ratio, actually their dividend's $3.44, and putting that over top of the forward earnings projection of $4.56, you actually do, again, you beat Philip Morris here. So surprisingly, Altria's payout ratio is only 75%.
Oh, so man, again, another knock better than Philip Morris with the metric, still above our 60% ratio, but there is a little bit more. They have 25% to go before they're paying out their full earnings. So you have a little bit more margin of safety for Altria.
And we did talk about this in the July and August, at least the August stocks to buy video. So feel free to check that out as we went into Philip Morris in a little bit of detail there about that payout ratio. So yeah, you're right. Both are over the 60%. Now the question is what about that dividend growth rate, that third Dividend Diplomat stock metric?
All right, well, let's kick that off. All right, so Philip Morris's 5-year average dividend growth rate is just over 3%. It's actually clocking in at 3.2% for the 5-year average. Again, not as high as I would like. They have a high yield to offset that, as we'll discuss here shortly, but still, that's barely outpacing inflation right now. And I think the best thing we can do now is let's see what Altria has, because let's see, is this a tobacco thing or is this a Philip Morris thing? That's going to be the recurring theme of what I'm having in this analysis.
So the 5-year dividend growth rate for Altria right now stands at over 10%. However, they just increased their dividend recently. And let's just say it wasn't 10%.
It wasn't?
It wasn't even half of that. It wasn't even half of the half. It wasn't even a fourth of that.
What was it? It
was only 2.4%. They went from 84 cents dividend per quarter per share to 86 cents. So they increased it 2 cents or, roughly 2.3, 2.4%. So not quite the 10% growth rate on average that they usually have. And this could be, definitely signs to come, especially going through the global pandemic.
Yeah, but I will ask you this important question, Lanny. What did they not do during the pandemic?
They did not do a dividend cut. Instead, they still came out and boosted your income. How would you like to actually still get a raise during the pandemic? That's what financial freedom is all about, and that's what that passive income source of dividend income is all about as well.
Yep. So in hindsight, was 10% realistic in a pandemic when companies are cutting their dividend? Probably not. To me, what's important is seeing that Altria is still managing to increase that dividend during the pandemic.
Right. And, now it's about how many years has Philip Morris grown their dividend, Bert?
Oh, this is actually pretty interesting. They've increased their dividend for 11 years, 11 consecutive years, and you may ask yourself, why isn't that longer if they're such a great dividend-paying stock? Why haven't they increased it? Why aren't they a dividend king? I know that's what's going through my mind, because trust me, you've watched Mad Men, you've watched all those other companies. Their brands have been around forever. Well, 11 years ago, they were spun off from Altria Group. They actually used to be a joined company. So Philip Morris has increased their dividend every year since the spinoff has occurred.
Yeah, and kind of keeping it apples to apples since the spinoff, Altria Group has also increased that dividend for over 10 years, which actually brings up an interesting point. Kind of what brands does Philip Morris have?
Yeah, this is perfect. I know we were going to talk about this earlier, but this is a huge point to bring up. Lanny mentioned earlier, Philip Morris is more internationally focused. Altria is domestic to the United States.
And baby. I am a real American. Fight for the rights of every dividend diplomat.
When it comes... All right, well, so Philip Morris possesses the #1 cigarette brand, according to their website, Marlboro. We all know it. That's the Mad Men brand that we all think of. Everyone knows Don Draper and the advertisements that he was making for Marlboro. But yeah, I mean, at every store you can see of, chances are you're familiar with the Marlboro brand. They also have brands such as L&M, Chesterfield, and oh yeah, Philip Morris, the namesake of the company, is also. All these brands are top 10 cigarette companies, so they are an international powerhouse from a brand perspective.
Yeah, and Altria Group, has Burt Slims. I mean, Virginia Slims. It has Marlboro in the USA, actually.
Yes, that's a good point.
Parliament, L&M as well. So really, the USA-based, domestic. And then, what was, Philip Morris's big investments in the, maybe the smokeless or heatless?
It's all in the same category to me. They each have a competing community. Philip Morris has invested in Ecos, that is their brand. And Lanny, what is the Altria brand?
Well, we've all seen the impairment charges. We've all seen the deaths that have happened, sadly.
So did they invest in impairment?
Yeah, they invest in impairments. It's a great way to increase shareholder value. Kidding. They have their investment in Juul, Juul, and they continue to own quite a bit of that company, and that's really in that vapor, tobacco-based product.
So what I take away from this fourth metric that we have here is both the companies possess strong brands. Some of them are overlapping, as Altria has the domestic U.S. version of the brand, Philip Morris has the international version. But you can see why these two companies hold the first and second place in the tobacco industry based on their brand presence. So I think we have one more metric for you. We haven't gone through our typical bonus metric of the Dividend Diplomats, Dividend Stock Screener, Lanny.
And in the way of scary movie. But wait, there's more. So the dividend yield. Obviously the dividend yield still matters, especially when you talk about what you're going to be getting in the form of income on your current investment. You don't want a 2%, 10% dividend growth rate if your dividend yield is 0.01%. Instead, the other way, you don't want a 2% dividend growth rate if your yield is also 2 or 1%.
Yeah, no, that's a fantastic point. And even just walking through how the stock screener has already played out, what have we learned about Philip Morris and Altria? They have very high dividend payout ratios. They have low dividend growth rates, although Altria has been stronger before this last year. In my mind, I'm going into this expecting I'd better be getting a strong dividend yield from these two companies, especially if they're paying out that much of their earnings.
And what is Philip Morris's?
They are yielding just over 6% at the time we are filming this video. So they are obviously one of the higher dividend yielding companies in my portfolio. So Annie, what is Altria? Let's compare.
So with the dividend of $3.44 per share right now going forward, that dividend yield currently is over 8%.
What?
Yeah. You thought 6% was high? Try 8. You thought Bert was short? Try me.
You're shorter?
No.
Okay.
No. So the dividend yield for Altria is over 8%, 8.09% as of the time of this video.
Yeah, wow. I mean, again, that's just another metric as we continue going through the line. Philip Morris is great. Altria is even better.
And again, you kind of have that higher payout ratio. So again, don't expect dividend growth to be great. I would expect it in that, honestly, whatever is over 0% to maybe a cap of 3 or 4%, at least for the next 2 to 3 years.
Yep. So I think this would be a great time to summarize and recap kind of the dividend stock screener and then even reach our final answer of which one do we like better today.
Which one will kick somebody in the nuts and give them a stunner?
Oh.
Which one?
Well, based on the metrics, let's walk through this quickly. Price to earnings ratio, both are lower than the market. Altria has a lower price to earnings ratio than Philip Morris. Dividend payout ratio, both are over 60%. Altria has the lower of the two at 75%.
And that's with a dividend increase.
With that increase. So yeah, it's a huge point to remember right there. Thanks, Lanny. Dividend growth history, it's about the same. There's no difference between me for those. Brands, all the same. Both have fantastic brands.
Both sell cigarettes.
Yep, that is a fact. And lastly, dividend yield, where both have strong dividend yields. Altria is over 8% with a dividend growth rate.
Now, I will make a mention of this, though. I was in Europe, luckily, last year, and I'll say this. I was the odd one out not smoking a cigarette. Here in the States, in our domestic, country, it's like the complete opposite, though. So to keep that in mind when you think about these two companies, whereas, Philip Morris is really dominating that space that actually you see millions of people smoking cigarettes every single day and potentially every single hour.
Yeah.
Again, I felt like when I was over there, I probably came back and I smoked 80 cigarettes just being around people.
Yeah, I think that's a good point. That could even lead to why Philip Morris's price to earnings ratio is higher than Altria. That could be an indicator for why they're still trading at a premium compared to the competitor, despite some of the other metrics leaning towards Altria.
Right. So when it comes down, is there a sheer winner here when you think about Philip Morris versus Altria? Is there a clean-cut tobacco champ?
Yeah, who are you going to be handing the belt to after this?
Well, looking at the metrics, both have okay PE ratios, both have high payout ratios, both have high dividend yields. I think Philip Morris actually has a more consistent dividend growth rate, albeit it's lower, but at least you kind of already have that expectation. I'm not going to pick a winner.
Ooh.
I'm going to say, you can own both and kind of just split your investment up.
That is a wild card answer there, but I can't disagree with your answer. Both are looking great right now.
If you smell what the Diplomat is cooking there.
Yeah, so we'll see each other at WrestleMania.
Yeah, at Smoke-a-mania.
Yeah.
But, Bert, what would you say?
No, I would actually agree with that conclusion as well. It's not as if you were to say it has to be Altria. Both are trading below the market. Both are showing signs of undervaluation. And yeah, both for every reason, Lanny. I don't want to repeat what Lanny said, but I just agree with Lanny's conclusion. I don't think there's a right or wrong answer.
And again, not saying this is a stock you should run out and buy now. Definitely perform your own research. Please use the Dividend Diplomat stock screener. If you have any questions or comments about Philip Morris, Altria, the metrics that are being used on them, leave them below the description. We'll obviously put references to all the sites and sources we use. We'll put some funny, images and throughout the video. Hopefully you enjoy them.
Yeah. And I don't want you to tell me who you pick out of this. You tell me which one would you pick, Philip Morris or Altria?
Step up.
Yeah, you hear us talk enough about this, so let's call you out on this.
Yeah, we're calling you out. Let us know who you like.
Do it.
Do it.
Do it.
Do it. Do it. Again, this is Bert and Laney from the Dividend Diplomat.
Over and out.